Hey guys, today I want to review 2015, look at stocks that I lost money on, and see what I can learn from them. This is one of those things that I hate doing, but am really happy I did it after it's done. And then, of course, I recommend it to you. This was the suggestion of one of you guys. Thanks for the comment. You suggested that I look at my losers from 2015 and see what I can learn. Good news is there are several losers from 2015. We had 4. We had TGS Nopec, Keysight, Vectrus, and Taikoku Senai. And that is out of a portfolio of 7 stocks during the year. So above 50% loss rate. We still won. Good. Anyway. So what can I learn from them? And I don't want to go through all of what I wrote and what I thought on this, but there were a few broad things that I realized that I hadn't realized before I did this review. So, first off, I let some of my stocks get too large in my portfolio, Vectrus and Keysight, and they were too large as a part of the portfolio early in the year. So February and March, they were both 30%-ish each of the portfolio, and that was simply too big given the upside-downside ratio that they had at the time. I know, I'm in the future too. But I let it happen in this case because both of them had short-term taxable gains and they both had momentum. Remember when momentum meant that stocks were going up? And that's something I can improve. I can notice that when I have a short-term taxable gain, I'm hesitant to take it, and I need to push through that sometimes. Sometimes you really do need to take that taxable gain. What's particularly painful about this experience is that after Vectrus dropped, on March 20th of 2015, I wrote in this investment journal saying, hey, Vectrus dropped. Turns out it was too big given its price. Do I have anything else in the portfolio where I am vulnerable to this? And I wrote, yes, I should sell Keysight and I should take it down to 10% of the portfolio. And then, March 23rd, Monday, Keysight goes up. I have the chance to sell it all day long at an even better price than I said that I should sell it. I did nothing. I did not listen to what I had written down. When I ignored what I wrote in my investment journal, I let my gut override the best thinking that I can do. And I didn't sell it for the next couple weeks afterwards, and then the price corrected itself to a point where I was like, well, now I like the size that it is of the portfolio and the upside downside. Still makes me mad. That was something that I'd been kicking myself over, but the reason why I had let it happen, of this short-term gain plus momentum, I hadn't even thought about until I did this review, so it's useful. Second thing I noticed is that my downside estimates of earnings for 2015 were too high on several companies. So Taikoku Senai, Keysight, and Vectrus are all gonna come in with earnings that are probably below my downside estimates for earnings for this year. And part of that is fine because I don't really care about 2015 earnings or even 2016 earnings. I care about, where should this company be in 3-4 years out, and what is that worth? Sometimes you get the deal because the earnings are coming down for the next 2 years. But my downside estimates should not be too optimistic. If they're too optimistic, then there's something wrong with my process. I am an optimistic, happy guy, and I can't take that into my downside estimates. It'll screw up my decision-making process. And I hadn't even realized that. This was something I was blind to until I reviewed 2015. So, reviewing 2015 has been helpful for me to realize this short-term taxable gain stuff and this excessive optimism on the downside, which I wouldn't have seen before, and it gives me a chance to kick myself one more time for not sticking to my discipline. So, I encourage you to review your 2015. It's not too late. Remember, 2015 was a weak year. You're more likely to find mistakes of I bought this and I shouldn't have, or I didn't sell it and I should have, than you're not going to find stuff like, oh, I should have held on to that longer. That's something that you'll see in a bull market of a mistake. Some of this is outcome. What you're looking for is to improve your process. So go back, take a look. The goal again is to improve your process, not to kick yourself and make yourself feel like an idiot, because that's not going to help you do better in 2016. And So 2016 has started. We've got some lower stock prices. I hope that you are excited. I hope that you are finding some things that are constructive. And I hope that you're able to make some great decisions this year. Good luck, everybody. Thanks so much.